Welcome to another video, another week. So I'm gonna make this real quick. Don't have too much time, but as I promised, I will do this every week. So I want to go over here real quick the currencies that we're trading with some positions open. So I wanted to start off with the British pound, Australian dollar, why we closed out. Still a bearish bias on this. I still do think it's going to go down lower. But let me show you the reason here of why I stepped out. So let's zoom in here real quick on the 4-hour chart. So basically, price did what I wanted it to do, was break the 200 EMA, go right under a nice bearish candle. But then I saw price print this bullish candle. And as it printed that bullish candle, I got out of that trade. That's right when we got out of it. Just because it looked like it would be a retest of the EMA here. But I didn't want to risk it with that big engulfing bullish candle, so I figured let me take some profits. It was a little over 50 pips that we caught right there. So it's always good to protect your profits if you feel at any time, it's going to go back down the other way. So don't marry your trades if you feel like it's going to go the other way. You can hold on to trades and be in drawdown, especially in swing trades. Be open to about 100 pip drawdown, especially if you're trying to catch at least 200 to 300, 400 pips like I usually try to do with my swings. But if at any point in time you feel that price will go against you and you want to protect some profits, definitely do so. Don't marry your trades. But another reason was basically what I saw was a possible cup and handle pattern here. So if you're not familiar with the pattern, that's let me just draw this out real quick so you can see what it looks like. So basically it looks like a cup of tea, cup of coffee, whatever you want it to be, cup and handle. So you got the cup like this, and then you got the handle this way here. And when price breaks this handle, which let's say would roughly be that resistance line like this, breaks above it, retests it, price shoots up. Now cup and handle is a continuation pattern. So we are technically in an uptrend. So you can actually see price did that right here. See if you follow the mouse here real quick. Nice cup, handle, and then went to the upside. But we're back down here again. So that was also the reason too. I figured if it gets back up here, I don't want it to break and just shoot up, especially with how bullish the British pound has been across the board. But I'm still bearish on here. Just took it out, so we got 50 pips profit about. And I'll just want to see what price does here. Hopefully break under that EMA again, the 200 EMA, and then we should be good from there. I also wanted to break this level that it's in, roughly around here. I got my 38.2 fibs aligned. They don't have to be exactly right on top of each other, but right where they are near each other. This is a point right here that can provide some big support for price. So, but I have a nice rejection. It did go up. I have a nice rejection here, long wick from the 50 fib on the smaller time frame fib. I also drew my trend line down here for supporting for this little channel. It's in here. Little bearish flag you can call. And price did break through it, and that actually lined up right with it as well as rejection. So when price breaks through, always wait for a retest to enter. So if I get a nice bearish candle next week starting on market opens, maybe Sunday night, Monday, nice bearish candle that engulfs this, breaks through the EMA, we'll definitely be calling shorts on this again. Also, especially since it's retesting this area here, the RSI is also retesting my 50 level, and I got some pretty good bearish divergence here that's been building up. So yeah, just gotta wait and see what price does on market open. Also, actually, if you go back to the 4-hour chart, what I was meaning to show is we did have this triple top like I was mentioning in my previous analysis. If you want, you could call this part here of the third top actually a double top. This does happen, and you could see price went up to the neckline to retest after it broke, which is something we always look for. And just again coincides with the 50 fibs, so necklines for double bottoms, double tops, triple bottoms, right shoulders of a head and shoulders, whether it's inverse or the regular. I always look for it to be at the 50 fibs, so that's a little extra confirmation there. if I was trading this on a smaller time. But we did enter somewhere around here. I believe we entered right around 79.2 or something like that as soon as I saw this triple top and this resistance trend line. So what I also see here on the bigger picture is the head and shoulders pattern that I believe might be forming here. Go back up to the daily just so you get a bigger picture. I do see a nice triangle forming here based from this trend line and this trend line. Obviously, other than the wave analysis, and we got multiple confirmations here for bearish bias. We got a big supply zone down from here. Right from this point, you can see price tested this twice, almost 3 here, tested, broke, fake breakout. That's also why I'm actually bearish on this as well. As you can see, price did a fake breakout, buyer's trap right here on the daily chart. Price went right back underneath again. So the couple handle might possibly be valid, but I got just too much confirmation here. Another trend line for bearish confirmation here. So we just got to see what price will do when it opens. I'll be calling another short, and I'm looking to hold this at least up until this point here. It's going to be right around the 76.5, so you can definitely catch a good 200 pips there. But ultimately, I want it to go back down here, form this head and shoulders pattern, and at this point here, we'll see what price does. It might be going back up. If this triangle will be valid, it's going to go down to here, probably go up a little bit here, go back down. As soon as it comes here, completes that right shoulder, price can actually break through this triangle, retest, and shoot up. Or it might break this neckline of the head and shoulders and go down lower below this demand zone here. I haven't drawn the neckline for the head and shoulders yet. It's not yet looking like a right shoulder just yet. So once it does, I will be drawing that neckline, which will be coming from here to here, which actually, do apologize, I did throw me off just the way I drew my triangle. If this is a valid head and shoulders pattern, our neckline will look something like this, right at this point. So if price comes down to here and then plays around, it might jump up to here and then shoot down, basically, but breaks this neckline and shoots back to retest it. What actually might be happening here is the form of the head and shoulders validating, breaking the neckline, shooting down, and possibly staying within this triangle, probably actually trapping some sellers that are going to be thinking that this is going to weigh down, because generally a head and shoulders, what you do for take profits, oh, I didn't mean to do that, is you basically measure from the bottom of the head, so we're like, let's say 171, all the way up to here is 184, so you're looking at about 1300 pips is what they would measure for take profit on the break of the neckline. But that isn't always true. There's always other factors. I have another trend line down here, so I would ultimately need price to break through that, through all these trend lines that I have drawn out in order to go down that low. But that's what generally people on standard use to calculate their take profits after a break of a neckline. So it could be a seller's trap, and then this will be the actual next pattern that it's going to be forming, and they're just going to coincide with each other, which I love. So that's going to give me even more confirmation later on once we get down to this area for buys, for long positions on this pair. All right, so that's GBP/AUD. Just watch out for those orders I'll be calling. Next one, let's look at EUR/AUD. Since we're looking at Australian dollar cross pairs, might as well take a look here. All right, so I got this harmonic pattern. I got my demand supply zones drawn out. My wave analysis. Let me go up to the daily so you guys can see this better. Got my 5 wave, got my Fibonacci's drawn out. Let's see here. Alright, so I got a trend line drawn from here to here, which is somewhat unconventional, but I like to draw my own way with my trend lines, just whatever makes sense. As long as you have multiple hits on it, it's somewhat validated or strongly validated trend line. So I drew it out from here because it touches in multiple areas here that otherwise any other trend line will be touching, but then it's been broken before. So for long term, this looked like a valid trend line to me all the way up into this point. So price was in this somewhat you could call it a channel, looking like a rising bearish wedge possibly, and price broke through it, and now we're at this retest as it formed wave A and wave B. So multiple confluence here to go bearish. I got a retest of this double top neckline, which is right around this area. Price can possibly go up a little higher, but ultimately I am bearish all the way down to this point here. So you're looking at about a 400 or 500 pip trade, which will take some time. If you look through your times, I mean, we're right in July. This can happen within a month's time, maybe a month and a half, or maybe even two. You never know. You don't know how price is going to move, but it's going to be long term. You can scalp it. I'll definitely be adding entries as it goes. 4-hour chart here. So we have nice resistance off this 61.8 fib. Price keeps rejecting it. Right around the area of the 61.8 retracement, like I was mentioning, which is perfect for this Gartley pattern. You got like a double top possibly forming here. I got a trend line drawn here, this blue line, as you can see, going up. So price broke through it, got to this point to retest, and I got a very nice bearish engulfing candlestick here. So I feel good about it coming down. This will be the area to watch right here at the 56 price point, right around this area, next demand zone, 38.2 fib. As it's going to be right near the 200 EMA. So price, we have to see. It did break through the 200 EMA. So it's going to be coming down to most likely retest it, and once it retests it, it could shoot back up and can go to this point here where I got the 78 and 88.6 perfectly aligned, which would invalidate this pattern, this harmonic pattern that I have here, and our bearish bias at least for that time, because we definitely don't want to go negative from 57 all the way up to this point, hold it to this point, another 200-300 pips negative, and then it shoots even higher than that, and you never know. So that's why you don't marry your trades, because then at that point you just be kicking yourself and you'll be in losses. But I have very nice bearish divergence building up here, so I feel pretty confident on this coming down, at least to this point. But ultimately, I'll be watching it to actually complete this harmonic pattern and actually come down to this supporting line right here that price actually found support at. It was right here. So that's what we'll be looking out for your idea. I feel good about it. Definitely make some profits there. Next, I'll pull up USDJPY. This one here is just playing games with me. But there's been a lot of news last week, so I'm not too surprised. So basically what I see here, let me actually go back out even further. I got my trend lines drawn out on a weekly, so I see a nice triangle, nice big triangle forming here. Even drew a trend line starting from here up to there, which is touches here from that point. And price was actually retesting this broken trend line, and it's retesting this big resistance from the weekly. So we're at a very strong resistance point. So we're not sure what price will do. If it does break it and retest this level here and prints me a bullish candle, we're going way up, at least to the 115 area here. But then once it's back in this trend line, you never know how high it will go. But DXY, let me just pull that up and they'll come back. The dollar currency index, I see an inverse head and shoulders possibly happening here. Price was also at resistance here for the dollar. Resistance with this bearish channel that it's in on this line. Resistance in this slight supply zone that it's in. Big bearish divergence building up. Formed a double top right here. So we'll be watching for price to come down to this point, break through it, retest the broken neckline, and then come back down to form the right shoulder, which will be right around the 50 fib. As I mentioned before, I like to have that form around the 50 fib and coinciding with this trend line coming down. So I do believe the dollar is going to be coming down enough, I believe, to drop the UJ, enough to actually sidetrack real quick. GBP USD, I called a trade on this. I don't know if some of you guys still held it. We entered right around here when it broke this triangle channel. It had a retest, actually right over here. And then price went back down for another retest, but then it just came right down even more. So it faked us out here, buyer's trap. But it came back down to here. I'm still in this triangle formation. Price will do that. It'll print what looks like a triangle, but then it'll just possibly trap you out on breakouts and then come back down, but still keeping it valid just as a longer, bigger triangle in this resistance line here. So it broke through it. Going to daily. Part of the reason was this double bottom that was forming right here at this point with that. That's why we also got in, but price went down and rejecting off the zone. So what I want to see is I still have bullish divergence overall, not just from this point to this point, but also from here to here. It's still going up and we're down in this area. So breaking out of this triangle, bullish divergence, I'll still be watching this price to go up. I do believe this is the bigger double bottom here, which is the neckline here at the 50, and for price to go at least to this point to retest it, as well as retesting this EMA. And actually, the 200 EMA should most likely by then be down around this area as well, so we'll be retesting that. And once it breaks through this neckline and this 200 EMA, we're going to watch it just shoot up, which will also confirm for me this trend line here that was broken has not been retested yet, and generally it retests it, as well as you see the double top here in the bigger picture. I didn't have this drawn out yet. Draw like the rectangle there, right at this neckline, which is the 50 fib again, which again, I like the necklines forming at the 50. Now this fib is ahead of when this formed, but let's test this out real quick. Draw my fibs. Again, look at that, perfect. Right around the 50. It's not necessarily gonna have to touch it, but it came right to it. And so those necklines, look out for that. It just validates a market pattern, like a double top, double bottom, inverse head and shoulders even more for you. So that's what I see for GBUSD. And since the DXY will be coming down, this will be shooting up the GBUSD pair, and as well since the pound is actually pretty strong at the moment. So back to USD JPY. I got a bullish bat pattern, which I believe hopefully should complete, which then would give us massive profits coming all the way down from here to here, which would also have price bounce from this part of the triangle and this resistance down to this one to a supporting line, which is right where the harmonic pattern would complete, and would also then just validate the triangle more and have price go back up, because I do believe this pair is not coming down any lower than this point, not necessarily that point, but anywhere lower into this realm. I do believe price will be going back up this way over time, but we're looking at later this year or coming into next year, something like that. So we got a lot more time to go. The one thing that had me worried at one point was if you look on the daily, we got the 200 EMA here. Price was just playing around at this area where it went up above it again, trapping some buyers here, coming back down, retesting it. And I think it's actually just trapping buyers here again, just going up here just to form this double top. You could somewhat call this a triple top on a bigger picture. But it's just not breaking this 38.2 fib. It's not breaking this resistance, if it does go above it, which can happen right around the 111 price range, maybe just a little bit higher, again, will just be a bigger buyer's trap. And the reason I just think that is the DXY coming down and USD JPY just still going up, and the yen is gaining somewhat strength as well. So, and this is just kind of going against that. So redrew another trend line here. I got another one here for this rising bearish wedge, which confirmed us with this triple top before. We had this entry on the retest, so we were in profits a little over 50 pips, and then price reversed on us, and now pricing come up here, me redrawing this trend line, which you could always do that. Don't draw it one way and expect it to just be right all the time. In this case, when I drew it from here to here and price of this triple top and hit this point, when it broke out for a retest and we did that sell, it was validated. But on a bigger picture now, you can actually have this trend line drawn from here to touch here to see the price kind of fluctuating around it here, and it's actually touching this area here again. And if anything, actually grab this trend line here as well from the top. So it just seems very extended. Price just seems very extended here. We got this nice bearish candle for the resistance here. Now this is where I think price will be dropping. Now if it's going to go as low as I expect it to, not 100% sure, but once it comes down here, if you see a nice confirmation for bearish, I might call an entry, or you can do an entry. But if you do, I'll be watching the 1095 here for take profits. And if it breaks through here, on a bigger picture, this would be the neckline I'm looking for it to go down to. Hopefully break and retest and go even lower, or just really find the major support right in this area, which will also be the 38.2 fib. So look out for that. Next currency pair I'll take a look at is GBP/JPY. We made some big profits off of this one. I'm not going to be trading it, I don't think. I think I missed that move. I had the bullish bat pattern formed here. So we rode it all the way from up here down to here. We got a nice triangle. And the bat pattern formed. So we had price actually bounce right off of the 88.6 here and just shoot way up. So I kind of got upset that we missed this move, but I wouldn't be surprised if price is going to actually go all the way up to 148.5, maybe 149 to retest this broken trend line again. Let me zoom out here. This supporting trend line that was broken, which is why we entered this trade up here on this double top in the retest and rode it all the way down to about here on multiple entries. But I was expecting this bat pattern to form. I just had it, I believe, somewhere right around this area. Well, originally I had it down here, then I put it back up here as I saw price really shooting up. That was just a buyer's trap. And then after this move already happened is when I realized right at 88.6 this bullish bat pattern was validated. So if I do enter to the upside, I'm going to want price that broke out of this triangle to come back down to retest somewhere around the 38.2 that it just broke now, or this trend line, and print me another bullish candle, and then I might take this long up to here. But ultimately I might just wait for it to get to this point to just add more short opportunities, because I believe we're going to be in a downtrend now. We're making lower lows, higher lows, lower highs, so I would rather look for short opportunities in that sense. Now on the weekly though, what I did notice otherwise is a bearish three drive pattern form right here. So if you pull out your three drives pattern, you could see that I guess the 1.22 extension, 1.23. So it's supposed to be at 1.27 with a 61.8 retracement up to these waves, which would coincide with this with these trend lines and how it formed here. So this is the possible pattern, which I did think was going to be happening. Otherwise, without even seeing this from the daily chart, is price going up to here to retest and then shooting back down to the 140, 141 range, somewhere around here. And then we'll see what price does. It might find that support and then just shoot back up again, or it might just be falling even more. But that's still ways away in time, so too early to call. But that's why I believe this is going to be going along. Next trade, we had the USD CAD. We called some pips on this. Some of you guys closed this out. It was a quick 100 pips. Called the entry right here. It was perfect. Dropped right down. So I got the harmonic pattern, double top form at the completion, which is what I want to see. Negative 61.8 fib retracement. Extension. Went right to it from the double top. Price was what you can consider overbought, just losing momentum. That's what I like to call it. Go right over to the weekly. You got these trend lines drawn out. Got somewhat of a channel here. Got a wave count. Fifth wave. Big bearish candle. Now we're going to watch price right at the 131. See what happens here. It could bounce from this point and just go back up. You never truly know. On the weekly. Is it monthly? I think was it this pair? I saw something. Actually, yeah, I think this one was similar with the three drives pattern. There it is, yeah, my little funny drawing. So actually on the monthly, I see a possible cup and handle that formed a nice big one, and a three drives pattern here as well, just like we just had on GBP/JPY. So price rejected this point. We got a nice long wick here, so this price should be falling, and we could catch some major pips here. Ultimately would be a 1,000 pip trade, but that's it holding down. I mean, you're looking from this point to this point. If you're looking at your time scale, you're looking at like a good year's time before it gets to this area. But if anything, that's just extra confirmation for us to just be bearish on this pair for the next at least year's time. So I'm glad about that. The USD CAD here again. Pull my original chart. CAD, FXCM, perfect. Alright, so we had the rejection off the 88.6, negative 61.8, double top, broke right through, just dropped. So we'll watch it around this area here, which I think is right around the 61.8 fib, to see what price does if it bounces off this demand zone, and just see how low it's going to go. I personally would be looking at a take profit either at the 50 or the 38.2. So I'm looking to make a good 300-400 pips on this trade. I want it to drop down to this trend line level and then just see what goes there. So the 50 fib to be safe, 38.2 if you want to be aggressive with it. But at the same time here, we got some divergency from this point here to this point. Look at that point here. Look at that point, how it's extended. You could also see there's a little buyer's trap here at this double top. So we got this trend line going up. Price went above it, retested, shot up, and this is where you're thinking, oh, I got the retest, got the breakout. Market makers just trapped them and then just went right down. And what validates the trap even more is just if you see price just shoot way down so quickly like it did on our entry, that's how you know. So look out for that. Be careful with it. You can't win them all. So even on a break and retest, it's not 100%, but it is the safest way. You will get trapped. It happens to the best of us. You can't foresee that. We don't know how the banks trade 100%. We're not going to know how when they're making their moves, but more times than not, you'll be safe. So you just got to look out for it. Just watch price action, watch the wicks, which technically, to be honest with you, I wouldn't have even entered on this, even on the retest, just by looking at these wicks so long in rejection. I wouldn't have even entered, even though it did retest and then printed a bullish engulfing here. Just from this wick right here, I wouldn't have entered that. It's just too long of a rejection there, right down into the supply zone. But it definitely trapped some people, brought price all the way down. We caught about 100 pips, and I'm still open in this trade. So I'll just be watching what price does here. I could see a little bounce up back up to the 78.6 and then shoot back down, or just go right through it, since the DXY especially is in our favor. Again, the dollar currency index. So just got to be watching for that. So those are the trades that we got open. I'm keeping them open. I'll keep you guys updated. Hopefully by next week, we could just all be in profits on all these trades and be making some money. So I'll be looking forward to answering any questions you guys have. I hope you enjoy your weekends, and I'm excited for next week.